There's been a major shift in DeFi and it's heading in a new direction, and this is known as real yield. This is actually when protocols go ahead and share the revenue generated with users in a token that's denominated in something like Ethereum or USDC. And this is a major change when you compare it to DeFi 1.0 projects like Aave, Uniswap, or Compound, because all of these projects' tokens are just governance tokens. They don't actually share any fees with the users. I really love this direction that DeFi is going because we're really innovating on these tokenomics and models, where the last bull one we saw crazy things like Time Wonderland and its 80,000% APY. Now things are finally shifting away from Ponzonomics when we're paid out with this incredibly high inflationary token that nobody really wants, that people just farm and dump and it trends towards zero. Now we're actually sharing in the revenue that these projects generate and being paid in a token that we want, like I said, USDC or Ethereum. Real yield can really be broken down into a few different categories. Things like risk hedging vault strategies, perpetual swaps or decentralized leverage trading, or even things like Synthetix. And you yourself don't have to participate in any kind of leverage trading. What we can do as farmers is go ahead and buy these tokens of projects that we want to speculate on or we believe have great teams and roadmaps, and then go ahead and stake them and accrue the platform fees. What's up YouTube, welcome back to my channel. I am Crypto with Nick. I'm a crypto enthusiast and DeFi investor, and my goal is to always bring you the best DeFi strategies. So be sure to join our free community Discord, hit that subscribe button, and let's get into today's video. I really love this website. It's called cryptofees.info, and it lets you know the amount of fees generated by different projects or ecosystems. Some that we're going to touch on today are ones like GMX and Synthetix, which are some of the highest grossing revenue projects out there. We're going to be touching on 5 or 6 different projects, so be sure to check the timestamps if you're looking for more information on a specific project. But for now, we're going to kick things off with the leader of real yield, which is going to be GMX. GMX is a decentralized perpetual exchange allowing you to go long, short, or make swaps without the 30x leverage. The beautiful thing about decentralization is there's no KYC here, and it's available both on the Arbitrum and Avalanche ecosystems. We can see here some pretty awesome stats. We can see here that the total trading volume on GMX is $54 billion, with over currently $73 million in open interest, as well as almost 81,000 users are using this platform. If we take a look at the GMX interface, we can see here that we can go ahead again and do these long and shorts. I've actually made a full video deep dive on GMX, so if you're interested in learning a ton more, be sure to check out my playlist. What I really want to show you is over here in the Earn tab. See, GMX shares 100% of the fees with the platform stakers, the users, like people like you and me. So GMX stakers, which is the governance token, earns 30% of the fees, and we can see here this APR is 23%. 15% of that is paid out in escrow GMX, meaning it's the native token that does have to vest for 1 year, but 7.6% of that is paid out in actual Ethereum. And while I do hold a GMX position, something I'm more interested in is actually this GLP token. See, this GLP token is paid out 25% in Ethereum only. You're paid directly in Ethereum. There's no vesting, no lockups, and this is what makes GMX so beautiful. If you're not familiar with the GLP token, it basically acts as an index fund or basket of assets. Because this is decentralized, us users have to provide liquidity for the platform for people to take on those long and shorts. And so when you buy GLP, it's essentially 50% stablecoins that you're buying into, and then 28% of that is ETH, 18% of that is Bitcoin, and then there's a few other percentages here. I think there's 1.7% for Link and about 1% for Uni, but it's basically Bitcoin, ETH, and stablecoins. If we look at the last month, we can go ahead and see there's almost $6 million in fees generated, and it breaks it down between different swaps, minting, liquidations, and margin trading. I'm not the only person bullish here on GMX. We also have entrepreneur Arthur Hayes, who is the co-founder of the BitMEX exchange. This man loves perpetual swaps. Recently, he made a 100 ETH buy of GMX. He's also made significantly more buys. He has quite a large position, but awesome to see. The next project we're going to be talking about is Gains Network over on the Polygon ecosystem, more specifically G-Trade, that has done over $15 billion in volume so far. Now, I'm not going to necessarily go into depth on how to set up different longs and trades and do leverage trading, because each of these projects could definitely have their own YouTube video where we deep dive into it. But you'll notice something differently here on Gains Network. You'll notice that we actually have different synthetics like Apple stock or the euro. Gains Network actually allows you to do Forex trading. You can see here all the different market times that they support, and here they have 10 Forex pairs with leverages from 10x up to 1000x. They also have the option, again, to do stock trading, where they have the price of 20 plus stock, where you can do leverage 3x to 100x. And you can see here, of course, this is the standard stock market hours that you can go ahead and buy and sell. And when we dig into the stats, really everything is just up and to the right? They've generated, of course, over $15 billion in volume. And then they went ahead and generated over $11 million in fees. And these, again, go back to the users. If we go ahead and check out the staking tab, we have this GNS and DAI pool that you can provide LP pair. We can see here that's paying out 51% APY, and 21% of that is coming from the leverage trading fees, fees from the platform getting paid back to the users. The other 20% is from the QuickSwap AMM, people entering and exit different positions. I realize that if you add 20 and 20 together, you only get 40. This number actually accounts for compounding, but if you don't compound, it's still 41% APR, which is pretty insane. You can also participate in the trading vault, which is basically being the counterparty of this trading platform. You can see here it acts as a buffer between the profit and loss of the GNS and DAI pool. And if we scroll up a little bit, we can see that that vault is actually paying out 18% in fees. And if we dive into the docs, we got some alpha on GNS, which they're introducing GNS single-sided staking. If you're watching the video today, which is August 17th, this should be out by next week. So if we scroll down a little bit, we can see here that 40% of all the fees from market orders and 15% from limit orders are going to be allocated to GNS staking. And they estimate that about 70% of all their trades are market orders, so you'll get about 32% of those fees. Next up, we have Synthetix, which is actually one of the more older established projects when it comes to something like swaps and Synthetix. It described itself as the derivatives liquidity protocol. If we come over here to Synthetix, we can see we have a ton of different options. Everything like the Japanese yen, the Swiss franc, the euro, the British pound. And if we go ahead and check out layer 2 Saints, again, we have a bunch of different crypto options. We have things like Ethereum, Bitcoin, Link, Solana, Avalanche, Matic. If we go ahead and check out the different statistics, again, we can see that this platform has done almost $5 billion in total trading volume and has generated almost $12 million in fees. And again, if we come over here to the staking tab, you're going to see a big theme here. You can go ahead and stake and earn 100% of the fees, 46% over on the Optimism ecosystem, or I think it's about 29% over on Ethereum mainnet. Next, we're talking about Umami over on the Arbitrum ecosystem. Umami's story is actually really interesting because they started at this Olympus DAO fork that had kind of this rebase token style and have really pivoted to this new model, which of course is focused on real yield. Umami's really interesting because they kind of provide this risk hedging vault. So what you basically do is you can deposit into the Umami pool, and it basically creates a hedging strategy for you, and it leverages things like GMX and Tracer DAO. So what Umami does is it basically just buys GLP, which remember is that index fund, kind of that basket of assets, and it goes ahead and gets the swap fees in ETH. It also goes ahead and gets that escrow GMX, which of course it stakes for the higher APY. Now it goes ahead and takes those rewards that it's earning in ETH, and then it just swaps them into USDC, and this is what is paid out to you, the user. And the second part of the strategy in order to kind of provide this hedging vault is it leverages Tracer DAO. And so GLP is basically just Ethereum, Bitcoin, and stablecoin. So what it does, you can see here, is that it mints a bunch of hedges for you and then rebalances them daily. And again, with similar thing, you go ahead and get this Tracer DAO token, it swaps it to USD and it pays it out to you. If we check out this Umami vault, we can actually see right now it has a 5.5 million vault capacity. It looks like there's a little bit of room in it. So if you're watching this video, you might be able to get in on it, or just watch out for Twitter updates. They kind of continuously expand this vault very slowly, but you can see here the estimated APR is about 20%. You can also speculate on the Umami token itself. You can go ahead and deposit it and you'll earn 5.5%. And this actually comes from Umami's protocol revenue because on the hedging vault, they take kind of this performance fee and they go ahead and pay you out in ETH. Or you can, of course, compound your position for more Umami to maximize your passive income. Finally, we have one more project to talk about, which is Dopex, which is backed by notorious whale Tetranode. Dopex is pretty interesting because everything we just talked about was basically perpetual swaps or synthetics. So Dopex actually introduces decentralized options. With Dopex, we have actually a dual token model. So we have the main token, which is the Dopex token. So you can see here, this is limited supply governance token, but this is the token that accrues the fees and revenue from the pools of vaults and wrappers. Over here, we have the rebate Dopex token, which is basically just used to mint different synthetic assets, indices, or stocks. Protocols are actually available on projects like Arbitrum, Avalanche, Metis, and the Binance Smart Chain. If we scroll down here, we can see we can do different calls and puts, and you don't have to necessarily be the person that buys or sell options, but you can actually be an option liquidity provider and earn yield that way. You can, of course, also farm and stake Dopex by doing a Dopex ETH pair. This LP is provided by SushiSwap, I believe, and earn about 25% APR, which is pretty good. And the Dopex team just released a new product called Straddles, which is really interesting because normally with calls and puts, you're essentially betting on different strike prices, but with Straddles, you can now bet on the volatility of the asset. I definitely want to throw out 2 different honorable mentions. I didn't want to make this video too long or redundant. I definitely think each of these projects could deserve an entire video of their own, but go ahead and check them out. I'm just going to leave the names. Kujira on the Cosmos ecosystem, originally was on Luna but pivoted, amazing work over there. And Mycelium, which is backed by Tracer DAO. If you remember, we talked about it, how Umami uses it to go ahead and open risk assets. This is actually a fork of GMX, but it's just getting started. Pretty interesting project. I really love what a lot of these teams and projects are building in the shift to real yield. I really do believe this is the next evolution or stage in DeFi. Let me know in the comments if you want me to make a dedicated video about any of the projects that you see here today, or if you have a favorite project below, go ahead and drop it if I didn't mention so that I can go ahead and look into it. Also, come join the Discord. It's free. I promise you, there's nothing to buy. Shoot me a follow on Twitter. Anyways, cheers. Happy farming. See you in the next one.